Hey, what's up, guys? Sam here, and I'll be doing the premium video for Friday, January 17th, 2025. So, still got about 2 hours to go before the market closes. I'm not really seeing too much to be overly concerned about in terms of changing what we're going to talk about in the video here. So, let's go ahead and dive in. We're going to start by covering the indexes. We'll then switch over to we'll look at the bond market. We'll take a courtesy look at the dollar. We'll look at volatility products. And then one thing that I'm going to start adding into these premium videos that I do with you on Fridays is Bitcoin. So should be an interesting time for crypto. So I want to start incorporating that. I think that this administration coming in is going to be very crypto friendly, and it will be an asset class that I will be looking to be trading a lot more this year. So I'm going to start covering it in these Friday videos. So let's start here with SPY. And a couple of improvements, certainly. I mean, from last week to this week is certainly a big improvement, at least as it sits right now, and more than likely by the close. You're set to recapture the daily 8 EMA, and that starts to look a lot like the 1 bar breaks that we've seen in the past. So we have a 1 bar break of the 8 right there, and then you recapture it, and you rallied. This technically is a 2 bar break, but the second bar here did not confirm, and then once you recaptured the 8, it rallied. Then you get another 1 bar break here, and then you recapture the 8 and it rallies. And now we had last week a pretty solid close below the 8, and at least so far this bar is trying to recapture that as well. So that's very good progress by the bulls and very necessary. Also, this bar here is kind of a bullish engulfing candle, right? Like it engulfs the entire of last week's candles. So that is also significant progress. And then from an indicator perspective, this has not changed. This indicator still says no trend with a red MACD, which is fine. Because if it says no trend, we then have to rely on the lower indicator, and we absolutely do require a strong thrust. And we had gotten some thrust signals down here and here and here and here, and then you get the up signal here. And the up signal that's developed is actually developed in the strongest way possible, which is what I call judo. In this case, it would be bull judo. And bull judo means that you had a down arrow, and within 1 to 2 bars, you get an up arrow, right? So that looks a lot like it did back here, where you had down arrows, and then the very next bar was an up arrow, right? And then from that, you got a very large rally off of that. This looks almost the same, and arguably even stronger, because you'll note that back here, the green line actually crossed the center, whereas here it did not even have to go down to the center before you got bull judo. Also, in this exact moment in time, you have a squeeze that's building from the underside, so it's building in this type of fashion, which is constructive, and that allows it to potentially slingshot in that direction. From a pattern perspective, which is also very important, because keep in mind, I was telling you guys since Monday that I was expecting the CPI on Wednesday to come in cold, and I was expecting that to cause a rally simply because of positioning. I think a lot of folks were very much bared up due to the inflation stuff. And in my opinion, inflation has peaked, but the market doesn't seem to know that yet. Or maybe the market doesn't seem to believe that yet. But that's neither here nor there. So we did get the cold CPI that I was telling you about on Monday. And this rally has been certainly very strong, and actually stronger than I was looking for. But I'll take it. But from a pattern perspective, if you look at the pattern here, everyone was looking at this, right? And this is kind of like, this has become kind of a bozo pattern. And I say bozo pattern because it's like, that's that head and shoulders pattern, that's like day one of, that's like chapter 1, page 1 of Trader 101 kind of thing, right? So because of that, because it's such a ubiquitous pattern known by everybody, and everybody was talking about it. And then you got the neckline break here. What has really happened is when you have these head and shoulders patterns in this bull market, they have led to short squeezes to the upside, right? So, and this is one of the most diabolical ones because you have the neckline and you actually broke below it. Now, you only got a 1 bar break technically below the neckline, but it was a break. It starts to look like, hey, that's the top, it's the end of the world, blah, blah, blah. And then of course, you trap them and you gap them multiple times this week. And in many cases, when you have this pattern, you start to look for a retest, back at the highs. I don't want to put the cart in front of the horse, so we definitely still have to kind of look, right about here for resistance. Just looking left to right, you're going to have resistance from kind of that common area right around basically exactly 600. But if you break 600, you kind of have a little bit of an air pocket here right back to 609, right? So the thing is, a lot of folks are mispositioned here, and they are largely mispositioned, meaning largely in terms of position sizing. So it's not easy to reallocate billions of dollars when you get wrong-footed like this. You and I can click a button and get out pretty quickly, but if you have a few 100 million shares of whatever, it's not as easy to do that, especially if you're short. So this has the potential to kind of keep going for a number of reasons. One, bullish engulfing weekly candle. Two, bull judo on the high-low pro, which is one of the strongest signals. Three, slingshot squeeze. And then four, of course, is just mechanical positioning. So if we look at the score here on SPY, it's unremarkable. It's a -5, but there's enough here to pretty quickly continue to squeeze them. And I think they can until they can't. So as always, we spend a little bit more time on SPY than usual just because that sets the groundwork for everything else. Let's go to Qs. And the Qs are going to be the same thing basically, just maybe a little bit better. So the Qs here, they're breaking this downward trend line for what that's worth. The bull judo here is not really clean, so I wouldn't. This does not count as bull judo. One thing that I can say about the Qs though is that they have a 2-day squeeze as well as a fresh daily squeeze, so that's pretty interesting. Aside from that, I think everything that we just talked about on SPY applies to the Qs, so we don't have to do a deep dive on it. If you understand what I was talking about on the SPY with the potential to trap and mechanical positioning and all that stuff, all of it just applies to the Qs. The Qs are just a little bit better in terms of their overall structure. So same thing would apply to the SPY. We use that template for everything with the understanding that there's some things that look better and there's going to be some things that look worse. And I would say that probably DIA is still one of those things that looks worse, but not by much. Now this is a very, very strong candle. This is an overwhelming bullish engulfing candle. This is that's I mean, if you're short that, you're just you're so mad if you're short something like that, because that candle just basically undoes about almost a month's worth of damage. And in this case, if you're astute, you'll note that this is the only index so far that actually has bullish judo on the weekly chart. So pretty phenomenal signal there. Now again, I want to be really clear here because I'm telling you two different things, right? And it's just a time frame discussion. So I want to be ultra clear about what I mean here, because it's far too easy to get taken out of context. In the short term, the mechanical positioning and the signals are such that I think you can squeeze them probably all the way until probably February OPEX is kind of my deadline on this. After that, all of the signals that I've been looking at kind of start to kick in, right? Especially towards the latter part of the year. So in the near term, I think there is the mechanical positioning and the technicals to squeeze the market higher. But towards the latter part of the year, I am still looking for a massive down move, 30-40% plus, right? So I want to be super clear about that. That has not changed, nor will that change. I would have to see something truly remarkable to change that longer point of view. But in the near term, I don't have any puts, and I've been telling you since Monday that I was looking for a squeeze, so we're fortunately positioned for that. So just to be clear, in the near term, I think we have the juice to squeeze them. In the longer term, you know, past like May, maybe starting around May, I'm looking for I'm looking for some problems. Also, here on the DIA, as bullish as this signal is, being that it's bull judo, you'll note that it's happening in a very awkward way, right? It's happening with the squeeze histogram kind of in a downward formation. It's happening with this out of phase. It's just a little awkward, right? So this is kind of the ideal signal to do something like that, and then something like that later on. So hopefully that's clear. Let's move on to the IWM. So IWM, unremarkable. I don't care about the IWM. You can trade it if you want to. It trades like garbage. It trends like garbage. It's very short squeezy. It has these huge pops. It has these huge dumps. It's the weakest one of the bunch. I would rather trade the Dow, frankly. And I don't even want to trade the Dow, frankly. I would rather, if I'm going to trade something, I'm going to trade the SPY or the Qs just based on what I'm saying. So I'll pull it up just so you can see it for yourself with the scores and all that if you are interested in this, but I have zero interest in the IWM. Let's go ahead and move forward. Let's go to the ZN. I'm watching Avgo. We bought Avgo today. We did so pretty aggressively, meaning that we went out of the money with it and relatively short dated. But so far it's been behaving like a champion, which is what we like to see. So ZN here, no material change quite just yet. It is putting in also its own bullish engulfing candle, and so maybe that's the start of something. The problem with ZN here is that the damage is so severe. It's still a max bear, right? So it's going to take a lot for this to start change, but one step at a time, I suppose. So there's really not much to see here. Where I do think it's interesting, as we always discuss in this video, is the HYG, which is again much more in line with what we care about, because ZN matters if you're trading bonds, but if you're trading risk on, risk off, then it's much more of a HYG conversation, right? And you'll note that this chart looks significantly better than ZN, which is actually kind of bullish, because this is just a. If you're new and you haven't heard me discuss why the HYG is such an important thing to look at, maybe ask in a live session and I'll cover it there. But I'm just going to work with the assumption that everybody's aware of why we look at HYG and why it's so important. And in this situation, I mean, this is a very, very strong candle as well, right? Very, very strong candle. And aside from that, it really is just neutral. But it is definitely in the bull's court at this point. And if we were to start thinking in terms of negatives and positives for the market, this goes into the positive side of the equation. So this helps the bullish case. Not overly strongly, but if you compare it to where ZN is, this is dramatically outperforming. Let's go to the dollar next. I would imagine the dollar should be down. I haven't looked at it lately. I haven't really been looking at the dollar all that closely. I don't know how correlated it's going to be with anything that really matters with what we're doing. And the dollar is up today, which is a little weird. Yeah, I don't really have anything here on the dollar, nor can I extrapolate any clean reads off of it. If you told me the dollar would be up next week, stocks could be up. If you told me the dollar could be down, stocks could also be down. So I don't have a overly strong reason to look at the dollar here at the moment. I think HYG trumps what we're seeing here. So that's all fine. Dollar's just a push. I wouldn't say it's a bullish or negative thing. Let's go to VIX. Tesla's just killing it. Tesla, Tesla, Tesla. I had some 420 butterflies. I took them off during my live session with you guys, and I am thankful that I did. I took them off and then I turned around and I got more long. And Tesla, frankly, doesn't even have that good of a setup, but it is good. Don't get me wrong, but there are better setups. Avgo's a much better setup. Google's a better setup, but Tesla is Tesla. So VIX here. VIX is doing something that we haven't seen before. Now, if you're astute, you'll say, well, if bull judo is down arrow followed by up arrow immediately, what is bear judo? And that would be exactly what you see here. It's up arrow followed immediately by down arrow, right? So this so far is has been squashed. This attempt by the bearish powers that be to get VIX above 20 was literally, that lasted about 2 hours that day before they squashed it. Now they've squashed it all the way down to 16. You're kind of in the happy medium zone here. Like it's the VIX likes to be between 16 to 14, at least lately. But so far, this getting this signal to kind of get squashed is very important. So if we're going to start kind of ranking things, I think that the VIX would be more in line for the bulls here. And then lastly, let's wrap it up. Let's go with the old coin that is BIT, and that is up a healthy $4,600. And the thing with the Bitcoin story, it's a lot like the Tesla story. There's going to be two stories here for the next 4 years that are going to be very important. It's going to be Bitcoin and it's going to be Tesla. And I don't want to get political with it, but that's the world we live in. You know, both have ingratiated themselves into the administration in a very deep way. Tesla for obvious reasons, Bitcoin also. So it makes a lot of sense to start looking at this kind of stuff. And the Bitcoin setup here is very similar to that of the SPY, but much stronger. So the reason I say it's similar is because it kind of has this kind of topping thing going on here. And again, like we talked about on SPY, these topping candles on the Bitcoin, or this kind of topping head and shoulders pattern, I called it a bozo pattern. It just doesn't tend to work. It's just a little too obvious sometimes, at least in this particular market. Maybe things will change at some point in the future, which I actually expect they will. But for now, when you see a head and shoulders pattern in an uptrend, don't trust it. And this is kind of a good example of that. So this is already trying to head back to the highs here. And you can see that even though you had pullback and pullback, the indicator did not register as a sell, which is kind of cool. We like that. And you have a slingshot squeeze here. So maybe you get a sell then use type of event, but I don't have a reason to believe that. What I have a reason to believe here is just what's directly in front of me, and what I'm seeing here is a market that has the potential to take off the top and go to about 3 weekly ATR, which roughly right now is about 113,000, 114,000 or so. So another 8%-ish points there on the Bitcoin. All right, so putting all the pieces together, again, from a structure point of view, we have seen better structure. We have seen better markets. But what this market has going for it is that it has a lot of folks on the wrong side, right? Starting with the bonds, folks really, really pigged out on the bonds, as selling the bonds, shorting the bonds, thinking interest rates go to 1 million. And of course that started to bleed into the stock market. That mispositioned folks, in my opinion, quite greatly going into the CPI print. The last CPI print of this administration, by the way, which I thought was rather obvious that they would do whatever it took to give you a happy-go-lucky number, which they did, whether you believe it or not. And so now what we have is serviceable technicals, good enough. We have seen better. I do want to stress that we have seen better, but they are serviceable enough. And we have, very importantly, mechanical positioning to potentially continue to squeeze I'm looking all the way until February expiration. Maybe it happens a little bit sooner than that. Maybe it fails a little bit sooner than that. But I'm looking for OPEX in February to be kind of the deadline for this. So I am looking for kind of a quick pop, um, you know, potentially even a new high in the indexes, and then we'll have a different conversation after that, right? So one step at a time. All right, guys. Well, that is my time. We do have Monday off. Again, this feels like every week has had a day off lately, which is kind of weird. Part of me just wishes, we could just get back to normal. But next week we'll have Monday off, so I'll see you guys again back in the room on Tuesday. And aside from that, go outside, take care of your brain, take care of your body. Like the main thing that I always tell you guys, the one thing that I've learned from Johnny Carter is actually has nothing to do with trading. If you would have asked me 8 years ago when I started with Simpler, what do you expect to learn from John Carter? I would have thought it would. What's the number one thing, right? Because I have learned quite a few things from trading from John, but the number one thing that I've learned from John is that you have to, we trade to live, right? We don't live to trade, right? We trade to live. And before I started with Simpler, I lived to trade, right? I would ignore my health. I would ignore my relationships. I would ignore interpersonal and outer personal dynamics, and all I cared about was trading. And there is value to that, right? Because much like you guys, I'm sure a lot of you guys just love the game, right? You just have a love of the game, like I do. But the main thing that I've learned from John is just that you trade to live, you don't live to trade, if I can summarize it. And what does that mean? Well, that means that you're a human being, and that means that you need to get outside and move your ass around. And if you are capable of it, go lift some heavy ass weights, whatever that means to you. Take care of yourself, eat right, be willing to do a 3-day or a 5-day water fast every so often. And I encourage you guys to look into all of those things. I'm going to be doing that this weekend, so I will lead by example on that front. And again, I look forward to seeing you guys back in the room on Tuesday. Have a great weekend, guys. Cheers.